Well, President-elect Trump has promised a slew of executive orders on the first day of his presidency on wide-ranging domestic and international policy issues. Very own Rick Newman is here with more. And Rick, I think the big question for investors right now is, realistically, from your perspective, where should we expect to see the action on day one?
Oh, there's going to be action everywhere on day one. It's going to be hard to keep track of. I think markets might take days or weeks to digest it all. But I mean, some of the things I think we are pretty clear are coming. There's going to be the beginning of whatever Trump's trade policy is. We're going to see some hint of how far he's going to go on tariffs. I mean, the big question is he going to do everything he says he's going to do, or is it going to be more mild than that? We're going to see something on immigration for sure. I mean, this is one of the things Trump campaigned hard on. So he's probably going to go harder than Biden has gone on cutting down migrants coming across the southwest border. And then probably a lot on energy. Trump's energy policy, as we know, is drill, baby, drill. He wants to do whatever he can to generate more oil and natural gas production. So I think we're going to see something there. That does not necessarily mean we're going to get more production. I would caution anybody who's thinking that we're going to get all this energy flooding into the market. That's not really what energy firms want to do. They like oil prices high, they like where they are. They'd like to see them go higher. More energy means lower prices. So I don't think that they're necessarily going to do everything Trump wants, but he's definitely going to be good for the energy industry.
Rick, while we have you, you also think that Trump Treasury Secretary nominee Scott Bessent's 3-3-3 plan will turn out more like a 2-6-0 plan. Explain it, and why is that?
Well, I wonder if people are even aware of Scott Bessent's 3-3-3 plan, but I just went through the 3 threes, if you will, and I looked at what forecasts are for these 3 areas. So just very briefly, he wants 3% GDP growth. Probably not. Most forecasts are for GDP growth over the next 10 years of 1.5, 1.6% per year. I mean, we're going to be lucky to get 2%. He wants 3 million additional barrels of U.S. oil production. The forecasts are we're at about 13 million barrels per day, and the forecasts are we're probably just going to stay around there. And then the one that's really not going to happen, he wants to reduce annual fiscal deficits to 3% of GDP. Well, they are now at 7% of GDP, and they're probably going to go higher, not lower. I mean, Trump wants these tax cuts that are potentially going to add $5 trillion to the national debt. It's more likely that annual deficits are going to go closer to 10% of GDP than to 3% of GDP. So Scott Bessent has admirable goals, and if we reach them, it'll be terrific. I just don't think there's a very good chance we will reach those goals.
Rick, I'm curious what you made of the hearing yesterday. Not necessarily much that was too surprising. It was more just an elaboration on some of the plans and some of the thought process that we have heard from Scott Bessent. But just in terms of what the market seems to be hoping for versus what will be, and to use the word realistic again, and the priority here for Bessent as Treasury Secretary, how do you think that stacks up?
Well, he's one of Trump's less controversial cabinet nominees. He's going to get confirmed. He is going to be the Treasury Secretary. I think markets are generally comfortable with him, but markets disagree with some of the things Scott Bessent has been saying. For example, some senators asked him, "Well, these Trump tariffs, aren't they going to raise prices?" And he said, "No, I don't see any reason why tariffs should raise prices." And he explained that, well, the dollar will probably strengthen, and that will add new purchasing power that will offset additional costs. That is just not what markets think is going to happen. Markets think that if the Trump tariffs go into effect, more or less as Trump said they will, we will have higher prices, and that will be an inflationary problem. And that's one of the reasons, we've been talking about, the 10-year Treasury has been going up while short-term rates have been going down. That's one of the reasons why markets anticipate higher inflation under Trump. So he's not saying, that he's not squared up with markets on that, but he might also be kind of hinting that maybe Trump won't be as aggressive on tariffs as he has said while campaigning.
Rick, thanks so much. Really appreciate it here. We're going to be watching closely. And of course, a programming note here, Yahoo Finance will have special coverage of President-elect Trump's inauguration on Monday, January 20th, starting at 9:30 a.m. Eastern Time.